So guys, I am hearing so much noise that a lot of people think that a crash is coming, and I gotta say, some things are lining up for just that to happen. I can't say it's not a possibility. But the question you need answers to is not if a recession is coming or not, because sooner or later that's going to happen. It's not if the stock market crashes, because the market crash cycle seems to be accelerating, so you will get one eventually. The question you actually need answers to is exactly what to do about it, and that is what we will answer today. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. Now, if you've been watching my channel for any length of time, you know I could care less about making short-term predictions. I mean, everybody was guessing a recession was coming last year until it didn't, so I'm sure it was going to be this year, right? And it's the same exact thing with a market crash. I mean, we actually got one in 2022, but people couldn't help themselves. I mean, way back in October at the lows, those same folks were out there saying, this is just the beginning. It will get a lot worse. Why in the world are you buying? And of course, that didn't happen. So then it was, hey, just wait, guys. The big crash is coming in 2023. And of course, in 2023, the exact opposite of a crash happened. And instead, the market rallied big, and many of you guys out there are up 50%, 70%, made 100% plus gains. We have multiple group members, well over 100% gains just in 2023 alone. And guys, this is not new. The same exact narrative happened in 2009 after that crash. The same thing happened in 2020 after the shutdown happened and the whole world shut down. And if you listen to all that and you missed out on an absolute fortune just in 2022, if you were worried about a recession or the crash getting worse, instead of just buying, Google in the 80s, Amazon in the 80s, Tesla at 100, Meta in the 80s, Palantir in the 5s, and on with great stocks. You were able to make and grab hundreds of percent moves in incredible companies, best of the best, cream of the crop, once in a lifetime type opportunities. You were getting those sorts of gains, not on penny stocks, but in the best stocks in the world and the best companies in the world. That is why I personally put more money into the stock market during that year than I ever have before in my life after 25 years of doing this. I knew those stock prices were a once in a lifetime type of deals. Now, I had no idea where the bottom was. I didn't time a bottom on a single one of those buys, but that's exactly what we were doing. We were just buying, knowing full well we can't buy the bottom, but boy, this pricing is incredible, even if I was down in the short term. On this channel right here, when we were discussing it, we weren't concerned with guessing when the crash will bottom or if you will have a recession or not or anything else like that. We were concerned, and the reason why we were able to confidently buy is because we were concerned with valuations and executing our plans and controlling what we can control instead of blindly guessing or listening to other, smart folks who are doing nothing but guessing too, just because they use a bunch of big words and throw up lots of pretty charts and graphs. That doesn't negate the fact that everybody is just guessing in the end, and we are all guessing in the end. Nothing confirms anything, but I can lean on valuation paying off over the long term. So in regards to the coming crash that's happening right now or going to happen soon or whatever the case is, let's look at facts, not speculation, not a media narrative or a YouTube narrative. Let's look at the facts around the market, a recession, a market crash, and then we'll discuss how to position yourself to really take advantage of this market no matter what happens, guys. You can use these tools as basically weapons to make a lot of money in the future. So fact number one, the market corrects 3 to 4 times a year. That is the average, guys, which means we will have more corrections this year if we just follow the averages. And if your favorite stock ran hot basically this first 7 months of the year or so, your correction is probably going to be larger than many others who have not seen as big of a run up. But despite the market correcting 3 to 4 times last year, Nvidia, for example, still tripled during that time frame. Every time it corrected, it was a great buy the dip opportunity. And yes, we'll talk about how to identify those times here in just a second as well. I promise I got an easy way to identify and pounce on opportunities like that. But if you want to immediately see what I'm buying in real time to kind of confirm that and see my watch list with price targets, the earnings flash sale is ending soon and the price is going back up. But if you take advantage of it, you get 5 free courses, free coaching, use the stock analyzer tool for free, be a part of the best 6, 7, and 8 figure Discord out there, have direct access to me through DMs, on our Q&As, everything else. So make sure you take advantage of the flash sale. It is ending soon, guys. It's the pinned comment down there. So fact number 2, the economy and jobs are not flashing massive recession. I'm sorry, I know that doesn't fit everybody's narrative. There's all kinds of other, especially when we talk politics and all other stuff, all kinds of other narratives out there. I'm not interested in any of that sort of stuff. You guys know we don't run down that rabbit hole here. The Fed wants to lower rates, but hasn't been able to lower as quickly as everybody's wanted because the economy simply won't slow down, guys. I'm sorry. GDP is the best measure we have for economic growth, and I agree it's not perfect, but it's the best that we have right now. And our GDP is still positive, but it's finally slowing down like they wanted. Normal economic growth is in the twos, and a slowing economy is in the ones. And of course, if you go negative for 2 consecutive quarters, it's considered a recession. And right now, we're kind of hovering just below those normal levels, which is not necessarily great, but it's exactly what the Fed wants. And it does not signal that we're in a bad recession or anything else like that either. It just doesn't, guys. I'm sorry. I do see other problems out there, but this big bad recession that I've been hearing about really since the entire world shut down way back in 2020 just has not happened. Instead, we got one of the most benign recessions ever in 2022, and that's it. And I think if we get another recession, it will yet be another benign recession that nobody will remember in a couple of years. So barring a black swan event, there's nothing on the horizon that shows imminent danger now beyond the normal annual party of doomsdayers rolling out their pretty charts and graphs and facts and stacks and all that sort of stuff where they successfully predicted 69 of the last 4 recessions. That's the best that they got, guys. Will we get one again? Absolutely, it's going to happen. It's part of the normal business cycle, and it's a gigantic opportunity when they happen. Not something to be feared, and the facts prove that to be the case overall. That's exactly what you want. Fact number 3, stock market crashes happen every 6 to 8 years. So we just had an actual crash in 2022, so we aren't due for a while, but I hear you guys now. Luke, we had one in 2020 and then 2022, so it can happen more often. And I agree completely. So let's kind of look at the last 4 that have happened and kind of discuss why to see if there's any clues in there that can kind of clue us into when the next one's going to happen. So back in 2001, we had the dot-com crash. Now, I know a lot of folks are trying to draw comparisons to all the AI hype, but the AI hype is not even remotely close to the internet bubble back then by any stretch of the imagination, guys, no matter what you look at. Do your research if you think this is close, and you'll quickly find out it is not close. I mean, back then you had literal websites without a dime of revenue or plan to make money. They just went public because they had a website and were immediately given a $100 million valuation back in the dot-com bubble days. It was wild and just beyond euphoria back then. Now, I agree, there is a ton of AI hype, but there's also some revenue and some profits being generated now from it. And basically, if I'm kind of discussing that, for now to be kind of the same as back in, the early 2000s, late 90s, early 2000s, we would need to see a company IPO basically every week, or more than that, IPO every week, that went to the moon the following week based on the fact that they had a website that when you went there, it just said the word AI on it, and that was it. That was it. No revenue, no path to profitability, nothing, just a website that says AI. And that would need to happen every single week in the stock market. That is how ridiculous the tech bubble was at its peak. And to me, we're not even close to that at this stage. So there's really not a lot to be gleaned there, at least in regards to our current situation. So let's move on to 2008. And we had a meltdown of the entire global financial system. And I'm pretty sure you can't predict that. I understand Michael Burry was on the right side of that trade, but for the most part, nobody had the entire globe, financial system basically melting down. Nobody had that coming back then. So obviously trying to predict something that really nobody had predicted in the past is really, really hard to do right now. So that's not really relevant either. So let's look at 2020. Where we had the shutdown of the entire world. And once again, I'm pretty sure that there's no chart or graph or any person out there that could have predicted that. So it was another black swan type event that created that crash. And in 2022, inflation went up to the highest level in 40 years, and the Fed raised the rates the fastest ever. And I'm not sure anyone had that on their bingo card in 2021 when everybody was telling you to buy Tesla at 400 and every single penny stock to the moon and every single crap token to the moon because, I don't know, reasons, right? That was just the reason why. So what is it in 2024 that everybody is screaming about then? I mean, I don't know what it is. I just see people saying it's going to happen, and then they throw up a pretty chart and a graph, and they all look exactly the same as everybody that was screaming about those same charts and graphs in 2009, 2010, 2011, 2012, 2013, 2014, and every single year up until 2020, when we eventually had a crash that absolutely nobody had predicted. Nobody could have predicted a global shutdown of the entire economy. They were wrong all these years, but then they finally got it right. But did the charts get it right for over a decade? Or were there other events like the entire world shutting down, for example, that created that particular crash? I'm sorry, the market doesn't crash in 2020 if the world doesn't shut down. And we don't have crazy high inflation, the Fed needing to raise their rates as fast as possible if we didn't pump $9 trillion out there in response to that particular crash. So the facts show me that what is going on to cause the next crash is not known by anybody, much less a pretty chart and graph or whatever else the crap is out there. And if you try to guess and you try to not buy until this happens or that happens, whatever the case is, you are going to miss most of the time, and you're going to miss out on absolute fortunes in between, because guessing a crash is a fool's errand, guys. And it's stupid and just not a wise strategy at all. And yes, when it finally happens, the person that guessed wrong 37 times before them but finally got it right will be there saying, see, I told you so. But then they'll conveniently ignore the fact that they went 1 for 37, while those of you that didn't play those games and ignored those morons went 36 for 37 and had the guts to buy the crash when it did happen and make fortunes in time over during good markets and bad markets, which that's exactly what the statistics point to. But you got to understand the other side. How else can hedge funds sell you their underperforming funds if they deal in actual facts and actual truth? They want you to think that they are the experts despite literally underperforming index funds and dead people. Those are the facts around all this. But let's talk about the 5 steps I take to put myself in a better position to take advantage once again if we get a crash or a recession or whatever craziness hits or anything else out there where I make money during good times or bad times. You can use this exact strategy and these exact steps to make a lot of money. So step number 1 is do evaluation. Look, it all starts and ends right there. You do not know, as stocks are falling, whether or not they're overvalued or undervalued unless you do evaluation. You can't tell if you're getting a deal or not, or a steal deal or not, unless you do that. That right there was the number one thing that told me to buy all the stocks that I bought in 2022 was valuation. Did I get all of them perfect? No. Did I hit the bottom once? Absolutely not. Did I make a lot of money on the back end on the vast majority of the stocks that I bought? Absolutely, there was fortune to be made during that time. But it all starts with doing evaluation so you know what's going on. You understand those companies. You understand what a good price and a bad price is. Does it have more to fall? Whatever the case is, you're there so you know you're getting a steal deal or not. So step number 2 is plan every move. Look, one of the biggest mistakes I see us make as retail investors is we wait until something happens and then we try to react to it afterwards, which means you're reacting to an event. And you can't help when an event happens to have emotions run the event. And we all know emotions destroy your investing. That's why retail routinely buys high and sells low, right? Because we feel FOMO, so we got to jump into the stock despite the fact the valuation is utterly ridiculous. We buy it, and then inevitably it comes back down to earth. And then that fear has us panic selling on the way down. And you see exactly how that puts you in a point where you're buying high and selling low and rinse and repeat that process over and over and over again. That does not happen if you plan every single move ahead of time. I have a plan for what do I do if my stocks run? What do I do if my stocks fall? I have a plan for both scenarios. So no matter what the market throws at me, no matter what the world throws at me or anything else, I have a plan to make those moves. So when they happen, I don't have to rely on my thought process when emotions are high. I can go straight to my plan, look at it, and then execute from there. So step number 3, pull cash while everything is running. Again, this kind of gets into that not buying the FOMO runs, the hype runs, but instead pull back and pull up your cash and be willing to hold cash for a longer period of time during those hot market times. Stocks always come back to fair value or they correct down lower. So you don't want to be in a spot to where all of a sudden you're putting all your money in when it's high and when things are running. And then whenever it falls down, now you're going, I really want to buy the dip and lower my averages, but I don't have any money. Well, you got to pull cash when those runs are happening so that way you have additional money to funnel into the market whenever those times happen and the stock gets beaten down. All right, so just 2 more steps to go. So let's move on to number 4, which is work on your money loops. Guys, that's the other thing that I hear from retail investors constantly is I want to buy the dip. I wanted to buy the deals. I didn't have enough money to do it. You've got to work on those money loops, whether it's taking on extra hours at your job, whether that's house hacking, whether or not that's starting a side business, starting a side hustle of some sort, getting all your finances in order, obviously lowering your expenses while you're simultaneously over here trying to raise your income, ask for that raise at work. There's all kinds of ways to get working on your money loops, but you've got to work on them now. You cannot wait until a crash happens and then go, oh, okay, now I'm going to work on my money loops. No, just like everything else in life, you need to prepare ahead. Get your money loops going right now while things are good, so that way when things get ugly, Your money loops are already there, they're already in place, and you can just buy knowing that your money loops will continue to refill your cash pile so you can continue to buy more. If you're living above your means, that's the first thing you got to fix to kind of fix your own money loops there, and then work on some of the other strategies that are out there as well. Google it. We got tons of courses in my group about it. There's just so many different avenues for you to go, but you have to work on your money loops right now because you don't want to wait for the next big event to happen 2 years from now, 5 years from now, 10 years from now, whatever the case is. Wait for them to work on your money loops. You're already too late at that stage, and you'll be one of those folks, oh, I missed it this time, but maybe next time. And before you know it, you're 65 and you don't have any money to retire on, and your account balances could have been a lot higher if you were working on those money loops way back a long time ago. So make sure you're working on your money loop. And number 5, pounce when the fear is high. Look, if you've already done 1 through 4, it is so easy to pounce when the fear is high. That's when the noise is the loudest. That's when nobody wants to buy. And you point to a time back through the history of the stock market, the real estate market, you name it, where it was a terrible time to buy because the fear was high. It just doesn't exist. Every single one of those dips on radar, everybody always goes, man, I wish I would have bought stocks back then. Man, I wish I would have bought Nvidia at $100. I wish I would have bought Apple at $3. I wish I would have bought stock X, Y, whatever, way back at these lower prices that happened during these terrible high fear events. So you have to be ready to pounce. And if you do these 4, you can absolutely pounce whenever that fear is high. And if you want a complete blueprint to do all this, guys, I mean, start to finish, make sure you take advantage of the flash sale for my group where you get exactly that, a complete blueprint to do everything we talked about today. You get direct access to me anytime you want. You get access to all my buy and sell alerts in real time. You can ask me questions, have our entire group or myself help you through all the different processes, learn how to do valuation. Every single thing we discussed today, there's courses, coaching, and everything else involved to help you through all that sort of stuff. So make sure you check out the pinned comment down there. Take advantage of a membership before the flash sale ends and the price goes up. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.